The Medical Courier Connection podcast is brought to you by Key Software Systems. We believe that every delivery has a story, and it starts with you. That's why we built an ecosystem uniting accounting, delivery, tracking, and shipping, reporting, and more to not only bring full delivery and transparency to your customers, but to reduce errors and inefficiencies that stand in the way of over delivering on your customers' expectations. Will drive the heavy lifting that keeps your business innovative with the latest technology so that you can focus on building connections with your customers. The Medical Courier Connection podcast is also brought to you by Risk Strategies, soon to be Brown and Brown. In a world full of risk, your insurance broker should understand the unique challenges you face in business and life. They specialize in providing risk management, consulting, and insurance solutions designed to meet the specific needs of businesses and individuals. With deep knowledge spanning across more than 30 industries, we help protect what matters most with trusted advice, tailored solutions, and a proactive, consultative approach.
Hey everybody, Ken with Integrity Medical Courier Training.
We are providing on-site training in Roseville, Minnesota.
A man's digits turn blue due to too much cannabis use. A woman in Melbourne, Australia dies after being scratched by Minty, her cat. Stole the hearse and dumped the body on the side of the road, still strapped to the gurney, and then continued on with their joyride. A dog had to be put down after it was crushed by a package thrown over a garden fence, its owners claim. So, stay compliant, my friends. Get all your medical courier training needs from us at www.integritydelivers.com.
All right. Welcome to another episode of the Medical Courier Connection podcast. We're kind of pleased to bring Brian Jungeberg back into our podcast because you know what? Insurance needs never go away. We often joke about insurance and compliance training. You know, you don't need it until you need it. Well, with insurance, you really need it. And we see a lot of podcasters out there giving people bad advice saying you don't need commercial insurance. Just hop in your car and go. And, you know, one of the things the Medical Courier Connection and Integrity Medical has been doing for 22 years is training, equipping, and educating. And this is the education part. So it's time to learn a little bit more about the truth versus the myths regarding insurance. Welcome, Brian.
Thanks, Ken. Great to be here again. Thanks for having me back. I appreciate it. I'll tell you what, the intro is awesome. I love the intro. Every time I see the hearse story, that's the one that gets me.
You know, you'd be surprised how many people. So we train, we got new courier companies coming, probably 8 a week on average now. New courier companies coming to get trained. And it's strange because people will want to deliver the weirdest things. You know, some couriers want to deliver dirty needles and bags full of biohazards. And I'm like, why would you ever want to get into that? I have heard someone about a week ago say they wanted to get involved in delivering cadavers. I'm like, you're insane. But people have their reasons for wanting to get into stuff, and I guess it's like, well,
yeah, it reminds me of the bank cargo days, right? If we go way back in our careers, we're taking bags of processed checks or live checks, and then inevitably someone would call us and say, "Hey, we want to move a bunch of cash," and we would say, "Why would you want to do that? Why would you put yourself in those crosshairs, right?" And then on top of that, think of how dangerous that is for the unarmed driver with no security moving cash just asking for a disaster. So it's a wild world, and every time I think we kind of get to a place where it's pretty steady state, all of a sudden someone throws that curveball of like, "Hey, I'd like to move this," and you're I don't know, maybe you don't want to move that, right? So.
That's a great question. What is the strangest item someone ever called you and asked you, will you guys insure this?
Boy, there's been a lot of weird. Ammunition is always one. Military ammunition was one.
Oh my.
And we're not talking small like bullets. We were talking like missiles. So that was a fun one. Mm-hmm. Yep.
All right. Well, that's interesting. So we Integrity Medical Couriers, we've owned and sold two courier companies in our courier, and the last one was here in the Denver area. And when Check 21 came into effect, we were moving, we were servicing one of the nation's largest banks, and we were picking up deposits up and down the Front Range. And pretty much every single day, when the driver would hand over those bags to the processing center in Denver, they would always say, hey, what's this? What's this? There's cash in here. And I'm on a daily basis, yet the bank would tell their clients, do not put cash in those bags. And people still did. It's just, you can tell people, but, they have to comply. And that's why compliance, insurance is needed, because people are doing all sorts of stuff. You can tell them what to do, and yet they're going to do whatever. One of my favorite movies, I think it's Along Came Polly. And the main character was an insurance adjuster for life insurance. And one of his biggest clients was an eccentric millionaire. And I'll never forget one particular scene. He has his insurance adjuster meet him on the roof of a high rise. And the guy, is talking to him and then just jumps off the building. He was doing, whatever they call it, not skydiving, but at any rate, he had a parachute on his back. And I think about that in the courier industry. It's almost like, some people will move anything to get paid, right? And they don't think about whether they should. They just think, well, if I get paid, I'm going to move it. And so I loved, there was a series that I actually loved. I think it was called Shipping Wars. I don't know if you've ever seen that one.
Yeah. Yep.
Great show. I mean, and they move things the size of small buildings and airplanes and just everything. And, I never really thought about the level of insurance they would need to move, an airplane fuselage or whatever from one state to another. But let's maybe talk a little about that. For the average medical courier service, how much coverage do they really need?
I think it's a great question. I think the starting point on that, Ken, and we were talking a little bit about this before we started filming, right? Is the industry has this nasty habit of not asking what they're moving, right? It's a client wants me to move something. I don't want to know what it is, because then I would have to maybe do something different or buy more insurance or take a different, approach to it that could be more costly. And they almost operate under the, plausible deniability, right? We didn't know what it was. We're not responsible. You didn't tell us what it was type move.
Yeah.
I think in the old days, maybe that worked, right? Maybe there was less kind of knowledge out there. Let's go back to not pre-internet days, but if you go back to the mid to late 90s, it was just a different environment all the way around in terms of knowledge share and in terms of the legal environment, right? Nowadays, I think that you're almost asking for more problems by not inquiring what it is that you're moving, right? Especially in the medical space, because it has become so, as I'm kind of preaching to the choir here, but the expansion of the medical courier space has been massive. Like you said,
that has.
Move a cadaver, sure. Dirty needles, sure. Medicines, sure. Nuclear medicine, that's a new fun one. Everyone's grabbing with, right? And with all those come different exposures, different risks, different values. To us, a cadaver is worth X. To the family of the cadaver, it is worth far more than that. And you have those kinds of valuation issues that play into it. So yes, I think there's a lot of gray area in the space, and arming yourself with the knowledge of, okay, what is this and what's it worth? We were, as you did stuff for two very large national laboratories that we won't name by name. Yeah. You would look at the insurance requirements from both of those that were basically drawn up by their legal teams. And I'm going to tell you, and I got into a discussion with a former client who went to the dark side and was in sales for, I should say, procurement logistics side for one of those labs. And I said, these requirements are crazy, right? And he said, yeah, I know, but legal wants it, and that's all they're going to do. So we're going to have to just give it to them, right? And the thing that always got me about Ken was it was the cargo limit of $1 million. Okay. Now, were they carrying anything worth $1 million? Not in actual value, physical value, I think. And this is one of the biggest disconnects in the medical courier space, especially, right? It's not necessarily that the item you're carrying has a hard value of $1 million. It's the potential consequential loss of what happens if that item is destroyed or lost or damaged that can have the impact of $1 million. And so what we would say is, hey, look, it's not a cargo. That's not a cargo claim. That's an errors and omissions claim. And I think that's the part of the medical courier space that gets lost on people, because it's not something that the labs and the healthcare systems are actually asking you to cover and carry coverage for. They just say cargo and think everything is going to be covered. I think that's the biggest misconception right now in the environment.
Sure. So what is the difference then between cargo and errors and omissions? What's the difference?
Yeah, when you look at cargo is going to say, look, you have a package. We're going to pay for the cost to replace it.
Okay.
So they'll use the lesser of language, right? Because they don't want to spend more than they have to. So you take, for instance, the biopsy, right? Let's say we took a biopsy, or we took the entire mole, piece of whatever we thought was cancer potentially off of you. And now we need to have that delivered to a lab to be analyzed. It gets lost in transit or damage, compromised.
Yep.
What's it worth? What's a piece of skin worth? Well, nothing really, right? However, we can't go back and take more of it. We already took the whole thing out. So what you have is a patient who's an interested third party, right, to the whole transaction. And now they don't know whether it was cancer. They don't know if it was not cancer, right? They have some buzzwords in our space and the legal space are mental anguish and emotional distress. Yeah. And those are how the claim gets brought, right? Which is the patient saying, whoa, courier, you screwed up. I'm mad at you. I'm also mad at the hospital or the lab. I'm suing everybody, and I am traumatized by this, and plaintiff's counsel will trump it up, of course. But that's the exact exposure that the errors and omissions cover, right? Your cargo is going to say, what's the value of the goods? This is what we'll pay for to replace it. But again, you can't really attach much of a value to it. They will, right? But in the best case scenarios, when that happens, it's we lost part of what we took. We'll just have to get another biopsy. So it's a little bit of time and effort and energy to do that. But it's the emotional distress, mental anguish type claims that are falling under the errors and omissions. And what happened was, if you back up, 5, 6, 7 years maybe now, very intelligent, and I'll use that term loosely, plaintiffs' counsels figured out that they could double dip on that coverage or those claims by going after not only the errors and omissions policies, but also general liability policies. So what all the general liability insurers did was add language to clarify, hey, look, that's not what we're intending to cover. You got to go buy that coverage elsewhere. So, but there was a rash of claims where, instead of $1 million, they were getting $2 million, which obviously doesn't help where rates go for everybody as a whole.
Interesting. So we're talking about loss here, and we talked earlier about a story, and I wanted to talk about this or touch on it for a minute. 10 years ago in 2016, there was a courier who he was the owner of the Courier company in Illinois, and he went to pick up some frozen strawberries. There was 4 coolers full of frozen strawberries, moving him from the state of Illinois to either Alabama or Arkansas. I don't recall. I'd have to look it up, but moving him to another state. Okay. He was the owner of the courier service, and he pulled up to this dairy farm, produce factory, whatever you want to call it, supplier. And they loaded his car with those 4 coolers, and he knew there were frozen strawberries. That much he knew. What he didn't, so the shipper did not mark the coolers as being dry ice. Dry ice is a hazardous material. It's got to be marked, placarded, especially in these larger amounts. But the courier didn't ask any questions. And he, as I recall the story, he didn't make it out of town. He pulled over into a parking lot and expired. And the family just settled last month, or actually it was in, it was in at the end of February, settled for $241 million. So I guess my question on that, I mean, we could talk about liability for the rest of the podcast because I've got my opinions on that. That's another topic. We'll cover that later. But should courier services load up on liability insurance? Would that cover that kind of a thing? A wrongful death suit. I mean, $241 million. They went after the assets of that farm or produce provider. Talk a little bit about how that works and how much insurance does the average medical courier then really need? What if they're driving in their car and God forbid they're distracted, you have an accident, everybody expires, liability, who's paying for that? How much insurance covers
Great
that?
one. Yeah. So that if as I recall from that one, the bulk of that $241 million settlement was in punitive damages, right? So in other words, shipper, you really screwed up and we're going to punish you. In most states, punitive damages are not insurable because it's looked at as, hey, look, that was a preventable item. You literally didn't care about people's lives. So you're going to pay and we're not going to backstop that. Okay. So not to say that the other 40 whatever million in terms of the damages that were paid as compensatory were anything that couldn't be insured, but still you're probably looking at this being a large upside down loss, uninsurable for most of it. Right. Mm-hmm. The liability question is one we get asked a lot about. And I would say this to you. There's a definite exposure and risk for anything you do in the delivery space. Right. And it doesn't necessarily tie to just medical courier. It doesn't matter if you're just delivering packages, retail goods, whatever it is. And that liability for the most part rests in the auto side of things, right? Because the most frequent claims we see besides cargo claims are an accident, right? A driver, whether it's a fleet driver in a fleet vehicle or it's an independent contractor who's working for a courier service, gets into an accident. Those auto losses are the claims that we see the most of. In Postmates, DoorDash, Uber Eats, Uber, Lyft, that world had far less claims activity, right? And we often say it's been the Uberization of hired and non-owned auto, because what those companies did was really highlight the independent contractor model, and that people can be out there seemingly running errands or doing nothing in their vehicles that we know about, when in reality they're conducting business.
Right.
And so we've seen there's a more frequent nature of those losses now that come to the insurance market, and they are settling or getting paid out at higher values than ever before. So now you have a frequency and a severity issue, right? Not a great mix in my space to have that going on. That's generally what leads to the rates climbing year after year after year,
sure,
which is what we've seen. So our counsel to folks is always, anything less than $1 million is crazy. It's crazy low. You want to have at least $1 million, right? After that, it becomes a factor of what can you afford, what helps you sleep at night, and what are your customers demand from you with contract language. And I think, part of the struggle is at a time when the exposure has never been greater, the costs to cover the exposure have also never been greater. And the margins in the space are still the margins in the space. They're not gigantic by any stretch, right? So you have folks that are trying to weigh, hey, we want to have a profitable business. We want to make money, but how do we protect what we're building along the way? So, I think the baseline on that is $1 million, right? $1 million of auto liability coverage, which on the commercial side, Ken, is standard. $1 million of general liability, which is really a standard there too. And then if you go to the professional E&O, errors and omissions insurance, that's usually $1 million policy. You can buy $500,000, and I'd say that's better than nothing, right? So
sure,
I think there's those baselines.
Excellent. You touched on a pain point here because, as you know, we're on so many different social media streams, and I see it pretty much every day. Couriers complaining. Number one, they can't find insurance. We send them to you. I hope you guys aren't getting inundated with.
We appreciate that, and we're happy to talk to them. So
awesome, great. And then their big complaint is the cost of insurance.
Yeah.
Right. And as if I understood you correctly, so with Uber and Lyft and DoorDash and all these app-based delivery systems that have flooded the market, making it easier for people to ship things, the more people are out there driving for business, more accidents happen, the costs go higher, more claims, and thus the cost of insurance is rising. So literally the explosion of apps that make it easier to ship things have driven the price of insurance up. Is that?
yeah. And I'll tell you, here's why. Here's the kind of the linchpin to the whole deal is they've exposed personal auto insurance and claims that, so we all know in the network, right? Most independent contractor drivers, especially in package delivery or parcel delivery, only carry personal auto insurance, right? And a lot of times just state minimums, which I like, professionally speaking, makes my skin crawl, but I understand it because they're not exactly making a boatload of money doing what they do. So it's a measure to control costs for them. If I go back to the early 2000s when I started, if you had I'm driving for you, Ken, I get into an accident. The only thing I have is either a radio, right? A Nextel at the time, or I have my cell phone maybe. And no one really knows that I was delivering something when I got into the accident. And I'm probably not going to tell people that I was working at the time. So what happens is my insurance company pays for the claim and they never ask a lot of questions. Okay. As technology has gone on and the Uberization piece of things has gone on, right? Personal auto insurers have gotten a whole lot smarter, realizing that they have a ton of insureds out there doing these kind of side jobs, or maybe they're doing this job every single day, all day long, and we didn't know it because they didn't disclose it. So they have started to ask far more questions when the claims happen, right? And kind of sniffing out what were you doing at the time the claim happened, and also looking to technology, right? Looking at like subpoenaing phone records and things like that, where they can see, oh, this driver was under dispatch. We're going to decline. We're going to, deny the loss, deny the claim. And you'd say, well, how can they just say, no, we can't cover it? Every personal auto policy starts off with an exclusion for business use, right? So if you're using your vehicle to generate income as a business, as a 1099, technically you could have coverage denied for a claim. There are in the Uber side of things, right? In that world, the insurers realized quickly how fast that was growing. And they did what was called a transportation network company endorsement, which basically charges drivers or owners of vehicles more money, but gives them coverage for that kind of operation. And then on top of that, those companies, because they have so much money from venture capitalists and private equity backing, or now stock backing, they actually provide a level of commercial protection to the drivers when they are working for them. Well, we call it well under dispatch. Okay. Our space is a tougher one because it doesn't have that kind of money being pumped into it. It doesn't have those kind of margins. It doesn't have that visibility. So it's hard for drivers to get commercial auto insurance. And they can get it, but the issue becomes the cost factor, right? A personal auto policy with state minimum limits maybe costs somebody $500 a year, right?
Right.
Commercial auto policy, even with low limits, is going to cost them multiple thousands of dollars a year. So that's where the rub is, right? So one of the solutions that has come into the marketplace that is gaining some traction is well under dispatch coverage, or WUD for short, right? So I drive for you. I can purchase for maybe half the cost of what a true commercial auto policy would be, a coverage that gives me commercial protection while I'm under dispatch doing deliveries for you.
Interesting. And how, while under dispatch, I'm just going to write that down. That's interesting to talk about. So who carries the general policy on that? Are you saying the courier company, or that's just something that's added to everybody's private?
No, yeah, a lot of times it's either a sponsored program, or some of the third-party administrators in the space offer it directly to the drivers. So if, let's say I drive for you, you contract me through one of those TPAs, right? Yep. I can decide to buy that directly myself, or we have situations, and we're happy to set up these programs, right, where you would say, Ken, okay, here's my driver population. I want everyone to buy this. We're going to roll it out. Here's what the costs are. And here's the cool part, right? If everybody buys it, let's say we're working for Integrity and all 50 drivers we have buy it. Now Integrity's hired and non-owned costs go down, because you're effectively putting a layer of commercial auto protection that we don't have to guess is going to respond in a claim. We know it'll respond, right? So it brings down your premium because the exposure is less to you as Integrity. So that's one mechanism to help control costs. The tough part on that, if we're all being real honest here, is you're shifting a lot of the responsibility of the cost, or the weight of the cost, to the individual drivers, right?
Right.
So it doesn't, the economics of it don't always work, but it is something that would certainly make it's a safer operation, safer for your drivers, right? It costs a little bit more, but we really are big fans of that because of what it brings to the table protection wise for everybody.
Yeah, I like it. I mean, I think it makes sense. So, on the grand scale of things, you have all these drivers that want to get in under a certain program together. So they're getting discounts on, if they join an association or whatever, they're getting discounts on oil changes and all these other things. Is that like a, I wouldn't say crowdsourced a model, but the more people that buy into that particular policy, does the cost go down, or is it kind of a set amount?
It's set. So this is the tricky part in the insurance world. If you were to look at how pricing or rates are figured out, right? Mm-hmm. One of the most data-driven lines of coverage is commercial auto, right? Mm-hmm. Actuarially speaking, there's a lot of different variables that play into it that all the insurers look at and model. So if you look at well under dispatch, it's just an extension of commercial auto. So it is looked at on like the rating basis is going to be kind of what we would call a zone rated, right? So I'm in Cleveland, Ohio, right? You're in Denver or thereabouts. You're going to have different rate structures based on your geography and where the vehicle is and operates. So it's, there are certainly areas that are safer. Like I would tell you, our two geographies are to the lower end of what the cost structure is. And of course, as you get into typically coastal areas with more people and bigger, more volume of people and drivers, those rates go up.
Interesting. There's a question. So then would you say, let's talk Arizona, Phoenix, it's a high retirement area. Would that be a higher amount area, or Miami?
Miami's probably one of the worst in the country, right? I mean, you think about your tough areas, New York, the Northeast is very hard, very expensive for just about everything, right? It tracks with the economics. The Southeast has become expensive. Florida had a run where the way the laws were set up, there was a really tight window to respond to losses and lawsuits, or else it defaulted to whatever the demand was. So think about this. Driver rear ends somebody, okay? At the scene, they don't even get taken away in an ambulance. 3 months later, they get a lawsuit for $1 million claiming, neck and back injuries. Total BS, right? But if it didn't get responded to in 30 days, automatic judgment of $1 million goes to that party that demanded it.
Wow.
So that drove rates up there tremendously until they changed that, got under control. Georgia has become really challenging. One place that was really good for a while was Texas. Texas has had some legal changes that have shifted it to being a very tough auto insurance state right now. Ironically, Arizona is really not bad, but
really,
yeah, but if you go slightly north of there, Vegas is a terrible marketplace for auto. So you just it is a very interesting thing, and I think you pick up on something really good on the Arizona one. And this is not to besmirch our more senior people, but retirement areas are tough, right? I mean, part of the reason you go drive in Florida. I was down there for a soccer tournament and with my kids, and you pull out onto Tamiami and it's 4 lanes on each side, and you pull out of a driveway and it's 50 miles an hour. Like there's not a lot of room for error there. And you got 1 million cars, you got 1 million people, and you got, I would venture to guess, you've got a bad mix of aggressive driving and really, really tentative driving. And those things don't play well together. So that's why you see some of the rates there.
Absolutely true. I love Florida. I don't get down there enough. And I told my wife I wanted to move there, and she said, well, I'll miss you. So
yeah, if you look at the southern part of that state is where it's more challenging. The more north you go is a little bit better, but still not great. This is somewhat of a moving target rate wise. And you would maybe say to me like, hey, why is that? And my response would be because keep in mind that the statute of limitations on auto claims is typically, at least a year and sometimes longer. So basically the insurance carriers are going to set the rates this year. This is the premium you're going to pay. In 3 or 4 years, we'll know whether that was right or not. Right?
Wow.
Because you could have losses that take that long to get paid. And it's always kind of a game of catch up. So if they get it right for 3-4 years, we're in a really good spot, but it can always go sideways. And I think that's part of the misconception, but I think the frustration with the public and with the buyers of insurance is, hey man, why does this keep going up year after year? I never have any claims. And I think when you step back, and you got to remember, this is a law of large numbers, right? We're all pooling our risks together. You may not have claims. I'm sitting here telling you, we see claims every day. People in the space are absolutely having claims, and with more frequency and with more severity. So what's happening is that everybody's got to absorb those losses. And again, we don't know till 3-4 years down the road whether they were right with what they paid with premium or not. So it continues to kind of climb that way.
I think unfortunately the insurance industry gets a bad rap because people make fun of lawyers. I remember when years ago when I was in the theater watching the very first Jurassic Park episode, and when the lawyer got eaten by the dinosaur, the whole place erupted and people cheered. They just loved watching the lawyer get eaten. And I think unfortunately when it comes to insurance, they get a bad rap as well. But
well, we blame lawyers. That's who we are. We're on board with that with you guys. No, and it really, like, a lot of what happens in our space is a direct reaction to the legal community, right? Looking at lawsuits, looking at settlements, right? It tracks typically very closely with that. We'll be the first people to stand up and say, look, we need some tort reform. We need to rein this in because it isn't fair, right? Not, you go back to that example of you got rear-ended and it's $1 million settlement. That is insane. That should never happen. And shame on everyone for exposing it, right? When it isn't. But human nature, unfortunately.
Sure. I mean, there are people that when they get tapped at 5 miles per hour will throw themselves out of the car and do the crappie flop, looking for a big settlement. And that's also, fraud, exaggerated claims, things like that drive it up for the rest of the people that are, hey, look, I've never had an accident. I'm careful. I'm, whatever. So, quick question. So what's the most common type of claim you see?
Yeah, cargo. I mean, I think cargo is definitely, and then sometimes it's not even that they fully go through and it ends up being a claim, right? I think in this space, it's one of those coverages that there's always the potential that there could be a policy limits loss, right? Meaning you carry $100,000 of cargo, you're moving pharmaceuticals. Could there be a loss that? Yeah, absolutely. And we've seen them. In fact, I've seen it be, we carry $100,000 worth of coverage and the loss is $1 million, and those are ugly.
Who pays the overage?
A lot of times you go back to, it was $1 million loss, but the contract said 100,000. And what happens if you were to look at the whole supply chain there is pharmaceutical manufacturer, 3PL or shipper, courier, right?
Mm-hmm.
3PL is saying to the manufacturer, to the pharmaceutical company, look, we'll give you proof of $1 million. And then they take and lay off their $100,000 deductible to the courier. So in essence, between the two, the shipper or the 3PL and the courier, they have $1 million of coverage for the loss. They're just dividing it up, which is pretty commonplace. I think that the cargo world too, there's a lot of small losses that our couriers are paying out of pocket, right? Even if they're close to what the deductibles are. And this is one thing that I always say to folks first about, can I control costs a little bit, or can I get some relief on what I'm spending? The first thing you can probably do is look at the deductible you carry on the cargo, right? And I think our standard cargo limit is $25,000. And the standard deductibles are $1,000 for general goods and $2,500 for pharmaceuticals and electronics. And you'd say, well, why is that? And I'd say, well, those are the most damaged or stolen goods. So there's an increased risk. You got a little more skin in the game.
Yep.
The reality is a lot of companies, once they've grown a little bit, they're paying a lot of those claims out of pocket, even if they're $2,500 or $3,000. I would say to you, increase your cargo deductible to $5,000, save premium, right? And just keep it set up like in a kitty to the side to pay those losses out of pocket. You'd be better off to do it that way.
That's a great example. Years ago, I went out to a ambulance company in the Midwest, and I rode with their primary compliance and safety manager. And this ambulance company was setting up a courier service, and that's why I was there, training them and making sure they had, were compliant. And he explained to me that particular ambulance company, they did have insurance coverage, but they also had a $3 million bank account that they sat on to cover incidences rather than report it to insurance. I'll give you a great example there. A guy was delivering a patient to an appointment in a medical building. Basic ambulance driver, it wasn't an emergency. It was just bringing her to her appointment. She's 80 years old, and he undid her toe straps, looked up at the building and realized he was at the wrong building, looked across the parking lot, saw the right building, hopped back in the driver's seat, pushed on the gas, and that patient flipped over backwards, fractured her skull, and expired. And they paid that claim out of rather than report it to insurance and watch their rates skyrocket, they paid that claim out of that kitty or that savings account.
Now, the one thing I'll caution everybody on is, and this is a hot button issue in our space. Anytime there's the chance of bodily injury of any kind, you want to turn that in. Okay. I think this is one of the misconceptions of the space is if I turn it in, then they know I did something and they're going to hold it against me. Not true. Okay. What we want to do on the insurance side is we want to be able to be on the front foot and proactive with claims management. And especially if there's bodily injury, if you can get out in front of those things quickly and evaluate them, usually you can take care of them for no money or less money than if you just let it fester, right? So you can always pull back and say, hey, look, insurance company, I know we turned this into you. We want to go ahead and take care of this. They'll adjust that. And let's say it's a $5,000 payout, right? The adjuster will do that entire process. And then what they want to do is have liability sign-offs that are legal to protect you from someone coming back afterwards, right? So let them do that. And then if you want to pay for it or reimburse them, depending on how the insurer operates, you can do that. They're never going to hold that against you and tell you no on that.
Mm-hmm. Yeah.
So I think that I've seen people that have gone out and, we got in a car accident. We're just going to throw some money at these guys and make them go away. Does not always work. In fact, I've seen it go the opposite, where they threw money at them, didn't get liability sign-offs, and now later they're coming back suing for way more money, and it's very messy. Because at that point in time, there's a duty under the insurance contracts, Ken, for people to report losses as soon as possible. And so, generally speaking, it's like within a couple of days of it happening, we want to know about it so we can help you. If you sit on it for a month or two and then it pops up, you got a really unhappy insurance carrier, and that's never a great recipe for a nice result. So bodily injury, definitely turn it. I even say that with cargo too, because you don't know how it's going to develop sometimes. Better to turn it in when we say turn it in for record only. That's the industry terminology, right? So you can turn it in for record only, which means, hey, something happened. We're still researching it. If we think it's going to move forward, we'll get you more information, Mr. Insurer and his company, and you can assign an adjuster to then handle it for us.
So the conception or the idea or the thought, the fear that if I turn this into my insurance company, my rates are going to skyrocket, versus I can handle this under the table and my insurance rates won't go up. I mean, is that true, or is that not, or is that a misconception?
I think it's a misconception. Just because you turn it in, you can always close it out for nothing paid, and they're not going to hold that against you, right? Yeah. In fact, my argument back to the insurance companies all the time is, this is someone that understands the partnership. Like, this is the kind of client we want, because they're telling us about something right away. They're able to research it. They were able to take care of it. They didn't, drag us into it or need us because they realized, it was a small amount of money they paid out of pocket. Like, that's a great partnership. I would rather have that kind of client for the long term than anything else.
Does someone I mean, where does it come into? Where's the line drawn between I'm going to handle this myself versus insurance fraud? And what sort of things have you seen? Where's that dividing line between misconception, or I didn't understand, and outright insurance fraud?
Yeah, and I would say not so much fraud, just violating your insurance contract, and then it gets really ugly, because what you're doing is taking away the ability of the insurance carrier to do the job that they've promised you they do. So they get a little testy when you do that. And by a little, I mean a lot. They want to control the scenario. Like, their stance on this is, hey, Ken, we do this every day. Let us handle it. We're smart. We know what we can do with it. That's the biggest exposure, right? Is that you're going to kind of meddle in it and try and make it go away. And in the process, it's going to keep climbing in terms of cost and severity. And that's not a win for anybody. Now that will get held against you when it comes time for renewal, right? Because now It looks like you're not a partner, you're actually an adversary. And it's not true, but it comes off that way. So I think that really you've got to go back to your broker, whoever they are, and say, hey, this situation happened. What do you think? And we have those conversations all the time. And I would tell you 75% of the time, it's hey, look, see what you can find out in the next day or so. Let's reassess it. Then let's turn it in for record only, and let's see where it goes, and kind of adjust it from there. So,
yeah, I think, in the courier industry, bringing it all back full circle, so many people get into this industry. We get calls all day long from people starting their new courier service all day long. I mean, our phone, that's, one of the number one things. And they'll ask about insurance. And again, they heard from some social media influencer that they could do these deliveries on their own personal insurance. Don't tell your insurance company. They'll literally tell them, don't tell your insurance company you're doing this for a living. So what does it look like if a courier does that? They get into a terrible accident, and then they have to, basically they're liable for everything, all the damages, then personally, civilly, or?
Yep. Yeah, absolutely. Right. So they now have basically mortgaged their entire life earnings on that. And I think that's the blessing and the curse of the space is you can get into this with very small amount of money and cash flow, and the barrier of entry is low, right? And we've both seen a ton of people build some really incredible, lucrative businesses starting from scratch. So that's great, cool. The potential is there. I think the risk is what you just said. If you do it and you don't take some of the exposure seriously, you're putting yourselves in harm's way unnecessarily, right? And it's not fun to spend the money, but I'm going to tell you something that we say in our space all the time. When there's a claim, you know what the first question is from customers? And I'll tell you what it isn't. It isn't, what did this cost, right? What did the insurance coverage cost? The question is always, is it covered? So you've got, you want to make sure that what you're buying and spending your hard-earned dollars on is actually going to respond if there's a loss, whatever that loss is. The coverage is paramount. I'm not downplaying the spend because it is significant, but the spend has to be justified by the coverage. And there's a lot of, in this space nowadays, there's been a lot of attention put on it, especially since COVID, when it blew up and it became, it became very popular to be in the final mile space, where other insurance markets that cater to different transportation sectors started to write policies for the courier space. And our stance is they did not understand how dynamic and unique the courier space is and how businesses transacted, and their policy forms are pretty terrible compared to those that are more boutique and really understand the space. And we're talking about saving minimal dollars and sacrificing a lot of coverage potential, which is, if you're on the wrong side of that, boy, the savings really doesn't feel good because you just had a loss that is massive and uncovered.
Interesting. Can you think of a situation where someone thought that they were properly covered, but they were way undercovered and they found out too late after the incident?
Yeah. And there's a particular insurer on the hired and non-owned side of things who has very restrictive driver requirements. Okay. And what they say in essence is, hey, Ken, we'll sell you the hired and non-owned coverage. We'll protect you. But if one of your drivers at the time that they have a claim has a major violation on their driving record, we're not covering you. Now, what's your first question, right? How the heck would you know what the driver has on their driving record, except for the moment in time when you run a motor vehicle record for them? Right? Are you going to run a motor vehicle record every day? No,
probably not. No.
That's so cost prohibitive, it'll never happen. There's even services now that constantly monitor, right? But still, you're paying for that across your whole driver population. I don't know many customers of ours that are doing that, or people in the space in general that are doing it. So that's a very risky way of putting your whole company's existence basically in the hands of every driver you hire, because you'll never know what's happened along the way. And that's frustrating because that doesn't have to be that way. So to see that kind of language in the policy is, to me, that's almost, I won't say bad faith, but that's a really terrible way for an insurance company to try to control their risk. And they're basically selling you something that's, could completely never respond. So.
Right. All right. Really quickly, what does it look like? Let's say we've got people watching our podcast right now, mom and pop courier shops, just got into the business and they know they need insurance. What does it look like? What's that process look like? I'm going to give them your information. They're going to call you.
It's going to be the most fun they've ever had. We will make it as painless as possible. The process, I usually tell people, it can be done in as little time as 2 days, and it could take an extended period after that. And it really depends on how much information needs to go back and forth between all of us and the underwriters. We would talk with them first, kind of get the lay of the land. What are you doing? Where are you located? Who are you working for? Let's talk about what coverage you're interested in. I'm always happy to give my professional opinion. I think as we say in our advertisement, it's a very consultative approach for us. We've been around this space for 20 plus years. I'm not going to tell you what you have to buy. This is not my money that I'm spending. It's your money. I'm going to counsel you on what I think is appropriate based on what you are doing. Ultimately, you have to make some business decisions. And we have plenty of customers that say, hey, thanks, man. I get it. I will be back when I make more money to purchase that piece of coverage. Okay, no problem. Great. So we'll go through the process. We'll fill out applications. We'll collect some information. And then we're going to go out to the marketplace. We've got a number of exclusive markets that nobody else has, that we've developed proprietary forms for, where they are very specific to the space and they account for all of the crazy fun stuff you might do without telling us, so that we know there's coverage there. And we have all the other markets that are out there as well. And we kind of weigh it and say, okay, what is it going to, what makes the most financial sense for coverage and things like that. And we're going to come back with a proposal and look to get it all buttoned up for you. And like I said, it could be done in 2 days. It can take longer, but I tell people now, at a minimum, your spend is going to be in that $6,000-$7,000 a year range if you're buying hired and non-owned auto liability insurance, cargo insurance, and general liability insurance. That's basically where the minimum premiums are falling now, right?
Okay.
You get into, hey, I have commercial auto needs because I'm a owner and I drive my vehicle all day while we're growing the business. That's going to add some more cost to that. And that's just, there's so many variables, you can't really ballpark it, but we can do that on a case-by-case basis, quote that. So that's, and then the next question that follows the cost factor, Ken, is always, well, what's the down payment? How do I pay this? So from a cash flow perspective, figure conservatively that, you're going to need 30% of that final number as a down payment. And then the rest is going to be financed over a period of time.
Okay.
So.
Yeah. I mean, it's like compliance, from a medical standpoint, OSHA and HIPAA. Insurance is such a necessary thing.
Thanks for not saying necessary evil. We don't want to be evil. Just
no,
you know what?
And that's a great point. I mean, listen, you don't need insurance until you need it. And the thing is, I'm a risk manager. I've been, not to the extent insurance is, but I'm teaching people to manage and mitigate their risk by taking steps and getting trained and getting equipped and getting educated, right? So that, you can, we have so many stories of people, couriers, where they actually harmed the patient because they didn't do their job properly.
Yep.
Insurance is the same thing. It's a way to, insurance helps make terrible incidences and accidents more bearable.
100%. No, I want to put a plug in for you guys. Our underwriters who had the pleasure of insuring your businesses when you had them, right?
Yes.
Also fully know what you do from a risk and compliance standpoint. I love the fact that I just have to say, hey, this is one of Ken's guys. They're going through the program with him. And it adds, there is a subjective rate structure that helps with, right? So
really, you
can't always quantify it, but I'm telling you, people, when they're working with you and I take them to underwriters, they're looked at in a much kinder, happier light than those that are not.
That's amazing.
Yeah, it's great.
So I have a great example of somebody. I don't know if I can even share his name, but we have an associate in New York City, and when you drive into New York City, you see his wrapped vans from a mile away. You see his walkers. He's been a past president of CLDA, and he does magic tricks.
Yep, I say his colors are green and white and yellow.
Yeah.
Yes.
Yep. Larry Zogby. I'm gonna call him out. And the thing is, though, the culture of that company is they go to several risk management meetings all over the planet. He sends his people to these 3-day conferences where they're learning about best practices to manage safety and put policies and procedures in place to keep their people safe. I guarantee you that he gets a better rate on his insurance policy based on the very culture of his company and the attention they pay to safety and compliance and having integrity out there every year to train him and all the things that he does. He should be an example to the courier industry. Absolutely. in the right way to go about this, because there are other companies that are going to fly by on the cheap and do only what they absolutely must to get by so that they can increase their profits.
100%. I couldn't agree more. I think that when we get asked what's the differentiator, right? It's culture. It's always culture in an organization, right? Think of every organization that's been successful. They had a very strong culture, or they did, and their reason for then failing was there was a cultural shift or change to a negative side of things. So it's no different, I think, in this space when it comes to success on the safety and compliance side of things, the risk management side of things. It is a culture, right? If you're being proactive, if you're making the investment, if you're constantly living that, your staff and your contractors are doing the exact same thing. Like, they understand. They don't want the unnecessary risk, right? You're weeding out your bad actors along the way. You are putting good drivers in there. I mean, that's our number one thing is, can you be proactive with your driver population? Because I hear a ton, that's my best driver. And I look at the driver's driving record and I can say, that is not your best driver. That is your riskiest driver. Right? He's got the most violations, or she's got the most violations. You think they're the best driver because they do the most amount of deliveries on a per day, daily basis. They're doing the most deliveries because they are flying around town, speeding, doing really risky behaviors, and they've been caught a few times. It's only a matter of time before one of those things turns into a big liability situation. Yeah. And now that driver that you thought was great is costing you tens of thousands of dollars in premium because you've had a major loss on your record. So you got to be proactive with those. And as much as it's painful some days, you got to get rid of the problems before they become problems.
I love it. Prevention. I mean, be proactive. That's where paying attention to your driver, group is so important. And, owners can't always do that. The bigger the company, the more drivers you have out there, there's no way the owner can possibly manage them. So it comes down to middle management and lead drivers and people that are interacting with the couriers on a daily basis to see someone who maybe, this is really interesting. So I went on site to Ohio. I've been going out there for years now, almost 10 years. And there was one particular driver who they thought was their best driver ever until I rode with him. And I saw that he left his car running and unlocked at every single stop. So in his car were papers and documents and deposits and specimens of all kinds. And he would leave his car running unlocked and unlocked at every single stop. And until I went out there and got a look at it, they had no idea the risk and the exposure that they were under every single day with this particular driver.
Yeah. He had 30 times he invited someone to steal the vehicle and all the stuff in it, right?
Yep.
Crazy.
Yep.
Every single day.
Every day.
So 30, let's say he works 5 days a week. I mean, that's 6,000 plus times a year.
And you have to look at each one of those as an incident, as a risk exposure, risky behavior. You're exactly right. And
he probably rode, what's funny is he probably drove more controlled between stops because you were in the vehicle, right? So, one of the things I love is a follow along, right? When it comes to the drivers. And we usually say, like in a driver audit, hey, and you can do this to contractors too, right? It doesn't have to just be employee drivers. Just follow them on the route. Watch how they change lanes. Watch how they drive. Watch the routes they take. Watch what they do when they stop. Like, are they shutting the vehicle off? Are they locking it? All those little things. And it doesn't take too many of those audits to occur randomly before the entire driver population gets wind that you may be doing it. And they all tend to sit up a little straighter, fly a little tighter, do things the right way because they don't want to get docked on things. Now, some of that, I don't want to derail into labor law, right? But some of that, like, put metrics in your contracts. Put metrics for performance and safety and risk management in your contracts, and then proactively approach it and hold them to those standards, right? You would gladly pay a little bit more for a safe driver that you're going to have year after year after year performing than have the soft cost of driver turnover because you let some knucklehead drive and they do things the wrong way and you got to end up firing them in 3 months and finding a new person to train. That's not fun, right?
Yeah.
So,
yeah, absolutely. Brian, it's been great. I appreciate you as always coming out and talking
Okay.
with us here at the Medical Courier Connection podcast. And we look forward to our next visit. We are going to be at the ECA conference in just a few weeks. And are you going to be there?
I will be there. I'm a proud board member. We've got a great conference marketplace lined up, and always nice to see you and see all of our other vendor friends there, along with tons of customers and prospects. So really dynamic organization. I think this is going to be one of our best marketplaces ever. So knock on wood, hopefully, when we see you in 3 weeks or so, we'll be all raring to go and do a lot of business together.
Looking forward to it, Brian. Thank you so much for bringing to our group the importance of being properly insured. It's worth it. The upfront costs are always worth it, rather than being caught without it.
Amen. I appreciate you having me on. Thank you. You guys do a great job. Keep up the good work.
Thanks, Brian. So, all right, everybody, the podcast, don't forget to like and subscribe to this podcast. And we are on all the podcasting streams. Chris would mention them if he was here, but he's not. So again, join us next time at the Medical Courier Connection podcast. We appreciate you guys. Hey, everybody. Ken with Integrity Medical Courier Training here.
And this is what's happening, right? So with such a serious subject, but he's able to inject humor. So it's in our best interest to invest not only in safety, but give some of those dividends back to the drivers.
I'm like, how do you start this medical courier stuff? And nobody had a mentorship. Nobody told me what industry events to go through.
So I was thinking, like, I need a name for my first conference. And it just dawned on me, use the name that they keep calling me. And I was like, yeah, the Boss Maker Conference.
You're learning so many important things, and I'm so proud of you.
Yeah, that sounds a bit expensive. I think I'll just train them myself. After all, this isn't rocket science.
And we have liftoff of Antares.